Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Priyanka Uppal. Priyanka, not a very good day for the markets. In fact, we did touch those live highs on Nifty, and then a sharp knock that came in during closing trades. In fact, 130-point knock is what we saw on Nifty. We ended up the day below the 23,300 mark, even though we managed to touch those 23,411 mark. But last hour of the trade is where we saw the sharp knock coming in. And we did see the broader market, however, outperform the benchmark indices, that they have been outperforming as well. And we can see, especially the small cap spaces where the action was, it ended the day up with gains of over 1%. Sectorally speaking, we did see Nifty IT to be under a bit of a pressure. In fact, shares like Scoforge, Emphasis, Tech Mahindra, Persistent, all of them trading with cuts of almost 2.5 to more than 2.5% in trade. Nifty Media, Nifty Realty were the top gainers in trade today. Prestige, Centech, Phoenix, Lodha, all of them trading with gains of over 3.5% and or thereabouts. Nifty Pharma, PSU Banking and the Energy Pack also managed to hold on to gains, but metals, banks and the FMCG Auto Pack ended the day in the red. So that's where the market was, and like I mentioned, the broader market is where the action was. In fact, small cap is where the action was coming in. And if you look at if you look at Nifty, the benchmark in this index ended the day lower by 130 points from the day's highest point. It ended below 23,300, and Ultratech Cement, Grasim, Hero Motors, Cipla, Power Grid, these were the stocks that were holding up the Nifty. But Nifty eased off the gains since morning, and we ended the day with sharp cuts.
Actually, Ankita, we are tracking very closely whatever happens and whatever developments happen in political environment. The entire goalpost has shifted to now the key allocation of portfolios and the government's 100-day agenda. In fact, on macro front also, sentiment looks little tempered down. If you look at the Friday's jobs data and the wage growth, they both accelerated in the month of May. This week is going to be crucial in terms of macro factor also, because we have FOMC need plus inflation figure coming in, which will be the focus, of course. But the way you've highlighted, Ankita, of course, let's take the top stories in focus. One of the story which happens to be from cement industry, because GST of 28%, which could be possibly a rationalized in budget. This is what we are picking up. We are also picking up from experts. But till then, is the cement price going to be under pressure? But then today we saw surge in cement stocks. At least the large caps, Ultratech, Grasim, they surge in the trade today. Couple of other spaces like gas and pipeline stocks, especially MGL kind of stocks, where management guided a steady 5-year volume CAGR of 6 to 7%. Couple of brokerage notes on MGL, wherein the price target has also been elevated now. 1600, 1680, 1565. That's the kind of target coming in for MGL, and couple of other stocks from the broader markets, because they could be possibly included in FNO space. Stocks like Paytm, Titagar, Natco Pharma, Adani, JSW, host of stocks there which were buzzing today because of this news. Positive set of news coming in from the MFI data again. Another record high in terms of SIP we saw in the month of May. Mark crosses now 21,000 crore, and of course record equity inflows coming in somewhere around 36,000 due to flows especially in thematic and sectoral funds. In fact, you were surprised there were about 9 new NFOs in the month of May, and we saw a record inflow therein also. So the undertone remains very bullish for market. What lies ahead in terms of levels, what levels to watch out for, what are the technical experts picking in at this point in time? Let's understand from Mileen Vasudeo. Mileen, welcome to the show. What do you make of the markets right now? We did saw some kind of consolidation or a narrow range trade, what we saw in the day today. Market have already run up last week. We've run up around about more than 3% on Nifty, 3.5% on Bank Nifty, and broader market also did participate in last week's rally. How should one trade at this point in time now? Index levels, what to watch out for?
Good afternoon. If you see on 4th June, we made a bottom of 21,281, and from there 3 consecutive trading sessions we made a higher high formation. And even today, if you see, we made a all-time high, and then we saw in the final hour of the trade some profit booking coming in. But if you see on the daily chart, it is clearly a narrow range body formation, which clearly indicates that markets are slightly circumspect at higher levels. But looking at the breadth of the market, we are of the opinion that this is just a pause or a breather of the prior up move. And we are of the opinion that one should keep a buy on decline strategy in this market. Now, for tomorrow's trading session, if you see, there is a good support for Nifty at 23,140 levels and 23,035 levels. So any dip in that region should be used to go long in the market, and we are working with the target of 23,700 to 23,750 levels in couple of days time.
Right, Mileen. So what are the pockets where you see value in? What are going to be your top bets then?
See, in today's trading session, we saw good buying happening in fertilizer sector. So currently, if you see, Chambal Fertilizer has made a consolidation breakout with a huge volume. And currently, last what I had seen was 422 or 23 levels. And the stop loss should keep at 397. The target price would be somewhere around 460 to 480 levels. The second stock, which has shown strong high formation, is from the pharma pack, that is Cipla, currently trading at 1531 levels. One can keep a stop loss of 1486 and target would be 1600 to 1630 levels in couple of days time.
So one happens to be from pharma space, another one from the chemical space. Two buy recommendations coming in from Mileen. Thank you, Mileen. We'll let you go on these. Now we have Srishti joining in. Let's see what Srishti has to highlight in terms of breakout charts. Srishti, what do you have to... Mileen gave us one from pharma and one from chemical space. Where do you see the breakout on the charts today?
Well, yes, Priyanka, one of the stocks actually coincided with Mileen today, because I tell you, because though the markets were under pressure, from the index level, we have seen some profit booking, but on the technical front, it was quite a tough day to actually find any of the breakdown stocks. So let's get with the breakout stock, and you just can't ignore the breakout that we have witnessed on Cipla, because this is what we have spotted for our viewers. This stock did touch its all-time high levels in today's trading session, while the benchmark indices were a little choppy. The whole pharma space was also quite mixed bagger in today's trading session, but Cipla was flying high. Not just it touched its all-time high levels, but if you will see, it has crossed its earlier resistance level as well. For the fifth time, it did retest its around 520 odd levels and managed to surpass that, and indeed it was supported by a long build-up on the derivative side. So this is the first stock on the breakout side, but the second stock that even this space Mileen was highlighting was the chemicals and fertilizer space. And from the fact that we have picked RCF, though it has been a great move in today's trading session, but we will see that the stock has been trying to move above this level of 160 odd levels for quite some time now, and in today's trading session it managed to do that successfully. It was 6 to 7% gains for RCF in today's trading session, a bounce from its 20-day moving average and crossing its earlier resistances as well. So these are the two stocks we highlighted on the breakout side. Back to you.
All right, Srishti, thank you so much for that. But let's move on to the word from the wise then. Mileen Karmakar, who's the director and fund manager, Dalal and Brocha portfolio manager, is bullish on power ancillary companies and believes that power utilities will continue to perform well. Let's go across and listen into his views.
Within manufacturing, I think what we have bought into is predominantly power ancillaries. Rather than betting on power generation, we have bet on power ancillaries, and I think they will continue to, they have a long growth path. So they will continue to do well.
If one looks at power, there is utilities which have done rather well, and the general view is that India will consume more power.
Yeah.
Utilities are in a good spot now. They're no longer dependent only on state government wins and FAMCs in order to revive and survive.
Correct.
Do you think one should revisit power utilities?
So power utilities have already done well, and possibly they will continue to do well because there is growth in that sector. So there is many of these companies are putting in new power plants and things like that. So there is definitely growth in that sector. And because of that, that will continue to do well. But at the same time, I am very clear that PE expansions are not possible. So now you have to bet for what kind of growth they deliver, and then if you think that the P's are correct, you invest.
Okay, so Mileen bets more on power utilities and power ancillaries from here, and he believes that political continuity will play its role. Let's go ahead and talk about the mutual fund data which came in for the month of May. Mutual funds see net inflows for the second straight month. However, the net halves from April month. Equity funds see healthy buying with strong demand for small and mid-cap funds, but the headline figure, SIP flows hit another record high at 20,900, approximately 21,000. Sharad joins in with the more highlights of MFI's latest data. Sharad, tell us more about it.
Well, it's a very strong set of numbers coming in the May AMFI data, and the first and the most important thing is the SIP numbers. That has touched almost the 21,000 crore mark on a monthly basis. And of course, this is the second straight month where the numbers are going more than 20,000 crore rupees. Also importantly, the mid-cap, small-cap segment, there also we saw strong inflows coming right for the second straight month itself. And interestingly, there has been a record equity inflows coming in when it comes to the May numbers. Now the number is a huge 36,000 crore rupees, but there is an impact of new fund offers as well. And even if you remove the new fund offer impact also, the overall inflows are still at their multi-monthly high levels. Also, if you look at it, arbitrage funds saw more than 12,000 crores of inflows coming in. This is the second straight month of buying coming in. And also flexi cap segment, that is also where strong inflows have been recorded. Now, of course, if you look at the overall equity inflows coming in, that has been very strong, and this is strong for the 39th straight month. It's coming in the green. The AUMs, both the equity as well as the total AUM levels, are still at the record high levels. And overall, if you look at the numbers itself, especially from the sectoral and thematic segment, that has seen a huge number coming in, 19,000 crore of inflows to be precise. And interestingly, the NFO market is also very hot. More than 10,000 crore of inflows coming in across 9 schemes in the month of May.
All right, with that, it's time for us to slip into a short break. Don't go anywhere, we'll be right back.
Welcome back. You're watching Your Trades on ET now. There was one pack which was focused today, and we saw stellar moves in cement space, Ankita, today. Talk about Kesoram or Ultratech or Grasim. They saw a rally of more than 5%. And again, what happens to be the reason for the rally is the sustained push on infrastructure development, capex-driven initiatives. So all goalpost lies on the 100-day agenda of the new government. But then these stocks were on fire today. But there is one part of argument in the market also that what about the GST revision? We did speak to a couple of experts on it. Vinayak Chatterjee, founder and managing trustee, the InfraVision Foundation, talks about how he expects policy reforms to change in the infra space. Let's listen into what he has to say. And also, we did speak to CareEdge Ratings, and what are their expectations for FY25. We spoke to Revlin Sethi, Associate Director for CareEdge Rating, to understand how the cement prices could pan out in the year to come.
I think there has already been reasonably vigorous, shall we say, entreaties to the Finance Ministry even before the last 3 budgets, that the 28% GST on cement seems to be inappropriate, considering that it's an Aam Aadmi product, it's an infrastructure input, and taxing it at the sin road of 28% GST does not seem to be logical. So I am actually expecting in these 5 years the 28% GST on cement to be reduced substantially.
Now, cement prices, yes, they have been under pressure, and largely the price elusiveness, what we believe, is here to stay also in medium term. Largely it is because what we were expecting, that demand is going to soften, this being the pre-election, the demand generally softens in a pre-election period. And we did see, that April and May demand was not very great. So demand did soften, though in June there are signs that demand is kind of picking up. But then again, we'll be heading to a monsoon season when probably the demand was again going to be moderate. So we don't see cement prices kind of growing in 24 at all. In fact, in 23 Q4 also, we saw a lot of players have registered a degrowth in their realizations.
Well, another stock in focus today was KEC International that was trading with gains of over 5% today. And also earlier we caught up with Bimal Kejriwal, who's the MD and CEO of KEC International, to understand their FY25 business outlook and if in case they are expecting to go back to the double-digit margins. So let's go across and listen in to what he had to say.
FY25, what we have talked about is that we should be somewhere around 7.5 or so on the margin side. And we expect that in Q4, when we are exiting FY25, we should be, closer to double digit between 9 to 10%. I think we are clearly very bullish on the residential sector. We operate with select large developers, but I think the amount of inquiries we are seeing, the amount of orders which we have, is very significant. Along with residential, we are also seeing some movement also in the commercial piece, which was not there. So I think between residential and commercial, I think we should see a good order intake.
Talking about MGL in trade today, a couple of brokerage note here. In fact, MK View guided to steady 5-year volume CAGR of 6 to 7% price band. That is more than 10% focus on infra creation to spur demand growth. Capex target for FY25 also 10 billion. And MK, UBS, they've both maintained a buy stance on Mahanagar Gas, making no changes to the already set target prices. Snehi is here with us for more the complete detail on that. In fact, a lot of reports which came in because MGL was in focus last week also, Ankita, but then a couple of notes, and the notes have given buy targets, raising their target price only. If you talk about MK, they've given a target price of 1680. UBS has given a target of 1600. And of course, the focus is again on infra creation, and we've seen the kind of stocks move which we saw today from the spaces which augur well for this space also.
That's right, absolutely. Mahanagar Gas was in focus today. And we'll move on. Yatin Gupta is the CMD of Ward Wizard Innovations and Mobility shares his growth guidance for the top line. He also sees over 600 crore rupees top line, including Philippines order. He also shares sees export contribution target for this year and the next. Let's go across and listen in to his take.
Top line, if you consider for this financial year, other than the order which we would be executing in Philippines, we are expecting somewhere around a top line of 650 crores with two-wheeler share of around 60,000 vehicles we would be producing, and three-wheelers we would be producing somewhere around 5,000 units. What I oversee is we would be doing around 25 to 30%. Our share would be towards export, and next financial year, I oversee that our exports would be not less than 50 to 60%.
All right, and now time for some more buzzing stocks. Gaurav has a list of stocks which are buzzing in trade on the news flows. Let's listen into it. Gaurav, take it away.
Yes. Let's begin with Raymond, because this company is going to come up with a new project in Bandra, which is situated in Mumbai, Maharashtra, and the revenue potential from this project is going to be around 2,000 crore rupees for the company. And on back of this news, we saw this stock was trading in green today. Next, let's talk about Godavari Power, because company is going to hold a meeting on 15th June to consider share buyback, and on back of this news, we will definitely watch out on this stock as well. Next, let's talk about Ahluwalia Contractors, because company recently won an order worth 482 crore rupees, and if you look at the stock performance also, the positive reaction was seen in the stock in a day-to-day. Next, let's talk about Emphasis, because if you look at the stock, around 15% of the equities changed hand. Blackstone is likely to be a seller as per sources, and they are going to sell a position worth 6,700 crore rupees. But now IIFL Alternatives Research believes that after this sale, we may see some upweighting coming up in MSCI and FTSE index for the stock. And on back of this news, we will definitely watch out for this stock as well. And lastly, let's also watch out for GAIL, because company is going to set up 1500 KTI ethane cracker project, and the cost of the project is going to be around 60,000 crore rupees. And on back of this news, we will definitely watch out on what happens in GAIL as well. So on back of the news flows, we will be watching out on these stocks and see how they perform for investors in coming days.
And well, moving on to another stock that was in focus today, CEAT was in focus in today's trading session. We did see the stock trade with gains of over 3% as it shared some growth targets in its analyst meet. My colleague Shrishti Sharma is joining in with the key takeaways and what the brokerages are penciling in.
Well, yes, CEAT had its analyst meet, and very important key takeaways coming in from there when it comes to companies' focus on expanding in the domestic market, focusing on the replacement demand as well as expanding their overseas business and the revenue share coming in from that. First of all, when it comes to the replacement demand, that the companies seem to be strengthening its brand presence in the domestic replacement segment for two-wheeler as well as passenger vehicle replacement volume that is likely to grow in the double digits. When it comes to their overseas business, then from 19% contribution right now, the company aims to increase the revenue share to 25% in the times ahead, and for that they are seen to be expanding in the export markets, particularly in the US, EU as well as Latin America. The company seem to be reaffirming its cautious approach on the capex, which should help actually CET to sustain its double-digit ROAS, and the company aims to achieve the market leadership in the PCR segment over the next 2 to 3 years, maintaining its leadership in the two-wheeler replacement and increase in contribution in the overall export markets. Now, the company management is quite optimistic about the growth prospects. They are driven to be anticipated double-digit growth in the replacement volumes and expansion into the key markets. However, when it comes to the price increase, they do say that it is that the commodity prices are seen to be rising, which is keeping the upside quite limited in terms of the price increases. When it comes to some of the brokerages reports, then Nomura has come out with their note where they do maintain their buy rating on this particular counter with an unchanged target price of 3,000 rupees, as well as they are quite optimistic about the overall growth prospects. The tire realization shall improve on the premiumization and electrification is the take coming in from Nomura.
All right. Thanks very much, Srishti, for all that highlights from the con call. Thanks very much. From the analyst. Thanks very much. With this, there's a countdown on this show. But a lot of cues to watch out on the macro front also, especially from Japanese market, where the first quarter GDP has to be released. And of course, BOJ, Bank of Japan, also has to meet. And a lot of focus on this week also, where the central banks meet in Japan and of course in US. And let's see how these scenarios pan out. Till then, goodbye. Thanks for watching. Stay tuned to ET Now for more updates.
If you like this video, then like, share and subscribe to ET Now.